Hi everyone and welcome. It's been quite some time since our last stream, and after a few months of break from live streaming, it feels so good to be back, really. If you're new here, my name is Amandine Flachs, and for the past 3 years, I have been hosting monthly live AMAs with startup founders. But today isn't really our typical AMA. I'm joined by a founder, yes, but today Ash Phillips and we are going to reflect on the past year, the changes for the startup ecosystem, and it's a broad topic, let's just say it. So be sure to ask your question in the chat so we can really focus the discussion on what matters to you. I do have a bunch of questions, and I'm sure Ash has a lot also to add to that. But yeah, we want to answer your questions, so be sure to let us know what you want to know. Ash, it's really good to have you. How have you been doing?
I have been good. I've been busy, as always, but that, as we discussed already, is a default answer. But good kinds of busy. Lots going on. I'm sure I'll catch you up on it properly. But yeah, things moving forwards at the moment, and actually, ironically, picking up momentum towards the end of the year when I know a lot of people are slowing down. What about you?
Yeah, busy also, which is odd because I should be less busy than usual, but it's the opposite actually. I've been catching up a lot on my network over the past few weeks. So yeah, I spend my time just
Good.
reconnecting with a lots of people, and we should have actually catch up for a while because I don't think that we have really spoken
Not a
face to
while.
face since I had you on the stream. I think it was last February. So yeah, it's been a
Oh,
while.
that's ages ago. Yeah, that's ridiculous. But you're right. This is the joy and the challenge of the internet, isn't it? And the fact that like we're all so digitally close and available that sometimes we forget to really catch up and actually meet. There's so many people
Yeah.
that I know on Twitter that I don't think I've ever had an actual call with, which is ridiculous. But I love it for that reason too. So yeah, let's do it whenever you're ready.
So
I'm
yeah,
here.
before we get started, and
Yeah.
before we talk about the startup ecosystem, I think it would be good to talk a bit about what you've been up to. As I said, I interviewed you in February, and maybe not everyone has seen the video. Or
Of course.
also, I understand there have been quite some changes on your end, and maybe you
Yeah.
grew your team. Or I've seen some things on, especially on LinkedIn recently. So what about you give us some update and a bit about you?
Sure, yeah. Lots going on, and thank you for the opportunity to do the intro too. Yeah, so for those who don't know me, I'm Ash. I run a company called Dffrnt right now, but that is changing and becoming a little ironically different. It's changed a lot over the years. It's been around for about 10 years, been in the startup ecosystem for about 10 years, hustling my way to figure out what the hell I do for a living, and just like the rest of us founders, I'm sure. But along the way, building a community of founders and working with startups across the UK and globally, pre-COVID, running hundreds of events a year for thousands of people for free in 21 cities, I think it was at the last count, and getting those back up and running now the world has opened up a bit more. But things are changing. So I'm starting a new company, building that in public, and more public than most people are building in public, I think. I guess my thought on that is that people say they're building in public and it's just a few tweets about the bad days as well as tweets about the good days. And that's fine, but it's still filtered. I actually tried to vlog the journey previously and realized it was actually kind of boring because it was just time lapses of me sending emails all day and no one wants to watch that. So got to find a balance. But yeah, building a brand new company. It's basically what Dffrnt does right now on steroids. So as a result, Dffrnt needs to change so it doesn't compete. It would be silly for me to run two companies that do the same thing. So I'm trying to build that, which will be designed to put a co-founder in the pocket of every potential creator on the planet. Dffrnt will change to focus on the soft skills of people building great careers and what makes them different specifically. And doing a bit of contracting in between to pay the bills because who needs sleep anyway, right?
I know what you mean. Yes, I completely get that. It's really good to hear though that you're working on some new things, and that's quite exciting. I feel that the end of the year is always a good time to think about what you're doing, how you're doing it, if you should keep doing it or not. I mean, last year at that time of the year, that was when my co-founder and I, we decided to move on from our startup and to look at the next chapter of our life. We took the decision really over Christmas, and I think that's just a good time to think about what you're doing really.
Yeah, I wrote a blog once that was one of the more successful things that I've actually written was about not, it might have been a blog or a LinkedIn, but I think it was a blog, but it was about not judging people for using the new year to start. I think there's a past version of me that would have looked at that as something quite cliche, and buying into almost this hustle porn culture of it doesn't matter when you start. Tomorrow is the new day. Next month can be the start. It doesn't need to be January the 1st. And then after a while, realizing that's quite short-sighted because sometimes people need a milestone to work from. They need that mental stop-start process. And whether it's January, whether it's tomorrow, it shouldn't matter as long as someone's making that positive change. So I'm here for it. And it's just naturally fallen quite organically for me. Fundraising cycles, which I know we'll get into, are fairly prevalent, especially in the UK when April comes around, right? Because of tax years, you want to raise money before then and after then, depending on the circumstances. So December feels like a good time to wind down. Message for everyone, including us too, is to take time off where we can, obviously. And if January is when you want to hit it in January. That's what I'm planning to do.
Fantastic. You started touching on the fundraising ecosystem. I was reading yesterday an article from Crunchbase saying just in the UK there has been a decrease this summer of about 40% of investment compared to the previous year, and it was quite surprising, but in the same time it kind of validates what we've been saying. But some startups are still growing, and many are actually shutting down or decreasing their team massively. Do you think we've been in some kind of bubble for the past few years, and now everyone is kind of getting back to the minimum, the must-have, instead of the nice-to-have?
Yeah, I don't know. I can only talk about this kind of philosophically. I'm curious to see what you think as well. I'd like to lead the question with my answer first, but it feels almost like I'm not an economist, so don't quote me on this. But at a macro level, as someone who's been in the business ecosystem for a decade, which I know is tiny in comparison to others, but still long enough to make some observations, it feels like there's an ebb and a flow that's just continuous, based on the way that human nature is and the way that we use capitalism as a system. Is it reasonable to assume that a steady market will consistently happen forever? Probably not, because someone will always want slightly more. And there's a whole bigger, deeper philosophical conversation about socialism versus capitalism there. That is a rabbit hole. I'm sure we won't go down today because we don't have time. But therefore, it's almost, reasonable to assume that chaos, if you want to see it that way, or the up of a bull market and the down of a bear market are almost inevitable. And therefore, our job as founders, business people, entrepreneurial individuals by default, whether we're in careers or running companies or both, is to react. You want to insert the Bear Grylls meme of improvise, adapt, overcome here. That's basically our job titles. Yeah. And so if you can't do that, it sorts, and I hate this term really because it kind of is offensive, but for want of a better phraseology, like the wheat from the chaff, right? It filters the fakers out from the makers. It filters the people that are riding waves through fallacy from the people that are really trying to deliver impact and create sustainable models. And we've seen that as recently as this month with things like FTX becoming one of the biggest talked about stories of the year. So yeah, that's how I feel about it. I think it's fairly inevitable. I think our job is to react. But some of the best businesses are built in recessions, right? So if we're going into one or we're already in one, then maybe now's the time to start. What do you think?
Yeah, actually, it was also one of my questions if it's actually a good time to start a business, and I think it is. There will always be ups and downs in the market. I mean, when you look at the history, it has happened, and it continues to happen now for sure, over the past few years, there have been some kind of build-up, of difficulties. We can talk about the difficulties of the pandemic, the economic environment. So there's a number of things that kind of add up, and there are some startup and some founders that could have been in a very strong position that actually do what they can, but they just, the market conditions are just very not working out for them. So that can happen. But in the same time, I think it's very different to build a startup in an environment that has lots of money available, that has, kind of all the perfect conditions for you to succeed, and then having to face a different environment. It's a bit more difficult, but as you say, it's the founder's jobs to adapt. And I think it's actually a good stress test for your company, because you may be building, you may start a company and build a product that people are willing to pay for when there's lots of money going on and lots of money to spend. And then when you realize that your product is actually just a nice to have and is not solving a real problem, then I think it's healthier that maybe your product doesn't exist or changes a bit to really focus on solving a real problem. So yes, there have been maybe lots of companies who have too many people, maybe lots of companies who could use some refocus in terms of product, or there's a bit of different kind of profiles out there. But it's not necessarily the end of the world that this shift is happening, because that's natural. That's a natural cycle, and there's lots of things to take in consideration for founders depending on the situation. I'm thinking, for example, you may not be in the same situation if you're just starting out and you're focused on maybe building your product, but also getting revenue from your customers. It's not the same position to start a company today than it was maybe 2 years ago or 3 years ago, where lots of founders were reaching immediately for external investors to invest before even getting any validation from the market that they're solving a real problem. So in some way, it's healthier. But if you're in the situation where you already raise money, you have your investor like pushing you, or you have your runway decreasing, and you're like looking at the next step and struggling to fundraise, or having to do some down round, which is quite common now. It's not the best situation, and it's actually quite tricky. But you couldn't have predicted it, because you never know when the next cycle is going to come. So it's kind of tricky.
Yeah. I think investors, on that note, actually, investors probably need to be more reasonable here. And investors, especially institutional ones, are powered by their own investors who they're tasked with delivering a return for. So of course they're under pressure. But I think all the way up and down that system, people need to be understanding of the macroeconomic circumstances, where if an LP is investing in a fund and that fund is saying, hey, give us an extra 12 months to figure this out because it's just not going to happen overnight, then they need to be a bit more reasonable at that. And I understand that I'm kind of speaking out of turn here, because these people are giving them 20 million quid and paying them 2% a year to manage that money. That's a lot of money to throw away. But I'd rather throw away 2% of 20 million than a whole 20 million, right? By just writing things off if it's going to take another 12 months. VCs and institutions need to be more reasonable with their startups, because they're battening down the hatches. I think we saw, I think it was A16Z that sent around, it might have been Sequoia, but one of the larger funds had sent around a memo that said, hey, look, here's what's happening in the system right now. Here is our advice for what you should do as a startup. And it was about basically cockroach mode. How do you hold on to the money you currently have? How do you raise the money that might be out there? How do you turn what you have right now into money? And how do you stop yourself from dying over that period? And that's what happens, right? When companies are started in recessions, they start in cockroach mode. So everything else is a bonus. And that's why, it's really interesting. I'm a visual person, so I see all these things on graphs in my head, really, which is, the system does this and people follow the system slightly later. So we're kind of overlapping a little bit. And it's the people that get caught at those pinch points that either close or do incredibly well, depending on whether they're going up or down. And it's, from an outsider's point of view, it's fascinating. From a realist point of view, it can be morbid, because in the case of Google, Facebook, Twitter, thousands of people lose their jobs, and that's scary. But you know, if you're a bit of a nihilist like Elon is, it's almost like, hey, it's going to happen anyway, so I might as well be part of the game rather than watch it. And whether you agree with that or not is a different question, but it's happening.
Yeah, talking also about VCs, I don't think they're necessarily in a much better position, given that. Okay, I think for founders it's important to understand how VC work, and something to understand is that the money they get it from LPs, right? So these individuals who have money to invest, so they give it to the venture capital, so they can make money from this money. But the thing is, there have been a number of LPs who haven't been able to give all the money that they have committed. So you don't necessarily, when you're an LP, you don't give all the money at once. The VC is calling the money, or you're giving it at specific times. And so because of the stock market crashing, the crypto ecosystem crashing, lots of people have lost lots of money. And so there also have been a number of investors who just didn't have the money to invest. And other investors who were more, who had the money, but were more like, okay, a number of things are happening, so let's just wait a bit. And I think this has been quite a tricky, I don't know, past 6 months for the startup ecosystem on that front, for people who needed to raise money to actually survive. And I'm actually wondering about the different effect depending on your stage, because not all startup stages are equal. So I've noticed that earlier stages kind of benefit from a buffer time, where there is a scandal or some economic uncertainty rising, but before it affects the earliest stage, the later stage see it coming. So for example, before the summer, there have been a number of funds that stopped investing at Series A, B, and C. But at that time, I've seen many pre-seed and seed funds being around and be like, yeah, we are still deploying money. Now, since then, they may not have been deploying money for very long, I'm not sure. But I'm wondering if, how those different stages are affected, if they are just affected not at the same time, or if the earlier stage, if there will always be money, basically, to invest in pre-seed and seed.
Yeah, I mean, I think I take the optimist view on this. And by optimist, I mean the happy investor view on this, and that there will always be money to invest, right? And we've seen that with the scandals, especially in the crypto space this year, that companies that are built on pure fallacy are able to raise billions of dollars for something that has no utility. And therefore, you have to ask yourself a higher level question of, how are these people raising money? And yes, there's certainly a level of privilege that factors in, and access to networks for sure. And there's certainly a level of confidence that comes with those things that gives them the ability to pitch it to almost, and in many cases, as we've seen over the last 12 months, an actually delusional level of confidence in what they could potentially deliver. And so therefore, you can assume, I don't want to say that you can guarantee here, but you can assume that clearly money exists. Clearly it exists for companies, even if they don't have a product or a proven business model yet. But it exists either for people who have access and privilege, which is incredibly annoying for those without, and or it exists for people who can feign that access and privilege through hustle, hard work, and putting a mask on, like I like to call my American hat whenever I'm pitching anybody for money, because it's a bit more confidence I get and a pep in my step.
I like that, the American hat. I've seen lots of women thinking about what a man would do, because there's the same kind of thing where lots of men actually have more confidence and a bit more bold when it comes to pitching, and so lots of women think this way, before pitching I have to think what a man will do, but for you that's the Americans.
Yeah, because I can't do your version of that, right? Because I've default got the other stuff that comes with the privilege of being a white cis male. which I'm conscious of. It's hard for me to understand because I'm in it rather than outside of it, but I get it. And so I have to figure out, okay, well, where is my underdog nature, and who would be better at this than me? And if I went to north of America and ended up in Canada, then I'd just end up British and apologetic about everything. I'm generalizing massively here, obviously, but if there was a version of me that was born in San Francisco, how less apologetic would they be about pitching for much larger numbers than I'd be pitching for, and probably get it because of the level of confidence, right? Especially at the early stage, pre-seed and seed, you don't really have anything yet. And so what is the differentiator for early stage investors, institutions or not, or angels? And it's the level of confidence that's instilled in you by the founder. And so that creates an unfair advantage for many, as you've stated. Obviously, it means that arguably probably less women get funded, which is going in the wrong direction, especially considering they're better business owners statistically,
Yes.
as far as I'm aware. But the default remains that I believe there's always money out there. If someone told you they could guarantee you, they're not going to, and if they do, probably don't give them money. But if someone could tell you they could guarantee you a 2x return within the next year, and no one else can guarantee anything, you're probably going to put some of your money into it because it's a guaranteed return. So therefore, if you offer, by building the product you're building, the highest chance of the highest return on investment possible in a solid business model that is proven to work, then someone somewhere will go, take some money, because they gave it to Sam Bankman-Fried at FTX and he just borrowed it all himself and screwed the market over. If you're building something that's actually reputable with an actual product, then you can do an Elizabeth Holmes, but hopefully not go to jail at the end of it. So that's the story, is build a great company and hopefully the investors will come. I know it sounds like a Field of Dreams storyline. It's a great film if you haven't seen it, but focus on building the business, because investors do what investors do. They have to get returns for their investors, and if LPs still exist, then investors still exist, and if investors still exist, then the money still exists. The question is, do LPs still exist? And I'm not rich enough to have friends who can give me the answer to that. So we'll find out.
No, I get that. I think you raised something important also, is that VC isn't necessarily for every business model. It just covers a small part of it, and so it's important also for founders to think about that. Is their model, is their startup, is their business idea, is even the right fit, and the fact that it's getting slightly more difficult to get external money. Well, maybe that's a good time to think, well, is it actually worth spending months and months? Because that's the reality. It takes months, and it takes all your headspace for months. And this time you're not spending it on your business. So if you know that you have very slim chances to actually close a round because you don't have access to VC, because you may not have the right traction yet, you may, instead of spending months trying to get there, it's actually healthier to spend months trying to build the business. And then once you have lots of people on your wait list, when you have early customers, when you have money, it's easier to get more money to accomplish the next step. So I think it's actually kind of a more healthy thing happening, where money isn't available to everyone and anyone, and the different, like all the excess and all the different access to money, is the differences and the inequalities are shocking and not good at all. But in the same time, there are so many great founders that can just do it if they can focus on revenue and first build the company, build the idea, instead of raising money immediately, and then use this money to actually experiment with and see if it's actually a good idea or not. And the fact that we're based in such big cities also kind of give us some barriers. I was talking to someone who is quite active in angel investing this week or last week, and it's funny because he was mentioning some business hubs outside of the city, and the first thing that came to my mind was, every time I've actually been involved in hubs outside of London, what I've seen has been founders with like that are way much more advanced by the time they start pitching to investors. So I'm not saying they're more ready, they have better pitch or anything like that. Actually, usually they're not super confident about pitching with to investors. But something they have for them is they are much more advanced. They've been working on their business for a while. They already have users, customers, or whatever, and just for that, it's a much stronger position to be in. So that may actually be good for cities like London, where we've seen so many times people pitching, and you're like, you see the pitch and or the deck, and you're like, you don't have anything. You just started last month. You did the deck over the weekend, right? Please tell me the truth.
Yeah, 100%. I agree though, like there's a real inequality when it comes to geographical split of businesses and what they're focused on. It's an exposure thing, right? Like TechCrunch is written by people in major cities for people in major cities. Nobody in the Lake District really is getting the ads and the algorithm for that content. Well, they are,
Yeah.
but less people by per capita, I would imagine. Bristol is, where I'm based, and there are more startups here per capita than anywhere else in the UK outside of London. I don't know if that, I'm sure that statistic is still correct. We get lots of funding. The bar charts look great, but then you break it down and it's like, there's a few companies, a couple of companies that are getting the lion's share of that. And that's awesome. Then I have to ask myself questions about, where's the early stage money going and coming from? We have one syndicate here whose investment thesis is incredibly risk averse. They've just spun off a pre-seed arm, which is good to hear because now we've got a little bit more risk hungry money in the city. But anecdotally, tongue in cheek, once you finish pitching them in Bristol, you're already on a plane or a train because you're out of people to talk to at that point. And that's here where we've got more startups per capita than anywhere else outside of London in the UK. We've got two accelerators. Both of them cater to very specific subsets of industry. One is high tech and one is deep science. We're a city that's built on agriculture, financial services, professional services, retail. And if any company in any of those spaces, with the exception of fintech and maybe aerospace technology, wouldn't get into those accelerators. And so you've got to ask yourself, well, who's putting the flowers on the table of these companies' offices? Who's filling their fridges? Who's building the office in the first place? It's the SME ecosystem that represents 99% of the economy in the UK and globally. It's the SME community that represents 99% of the jobs market, generally speaking, too. And so we need to be supporting everybody up and down that range, the big companies, the small, and everything in between. And I think that starts with, and I'm not exposed enough to government programs really, but I think it starts with the exposure, the motivation, the encouragement of people outside of hubs to do more entrepreneurial things, whether it's business or not. I saw a tweet at one point where someone was like, where is the next major city for founders? And I understand there's going to be a geographical pool for lots of people. Is it Lisbon? Is it Paris outside of San Fran? Is it San Fran? Are people going back there from Miami, wherever it was, for the last year? But I think it already exists. It exists on the internet. We just need to wrangle them all together and create a space where they can all connect. Is LinkedIn the place to do it? I don't know. Am I saying there needs to be a social network for founders? Not necessarily. What I'm saying is that, live streams like this are hopefully really helpful for raising awareness to the people that don't otherwise have exposure, and other communities too. Millie Tamati, for example, Generalist World, shout out to them. She's based in literally the Outer Hebrides on an island which has something like 70 people on it, but she's building a community to connect people all around the country who are generalists doing really cool things. So, that sort of stuff needs to exist. But it has so many other trickle-down effects, like VC funding, for example, which people will claim they want to invest in regions, but they'll only go to that place for a day on the train and come back to London. And I'm like, if you really want to do the work, you've got to be there, and you've got to be putting it in that city,
Yes, definitely lots of inequalities, and I'm guilty. I mean, that's also why moving the stream from doing it face to face, where I really loved connecting with people, to actually going fully remote, it has been so much more interesting to talk to people who see something different, and some people who actually care a lot about where they're based. A few months ago, we had someone coming from Wales, I think. Somewhere far, and well, she was describing it as the middle of nowhere, but she loved it, and it was very important for her to be based there and to be representing the region, and I think that's just fantastic, and you don't really realize when you kind of walk everywhere to London, go to parties and networking events non-stop, which is something actually I have stopped doing even just before the
Yeah,
pandemic happened,
same.
and it feels much better. So it's but still you have to understand this privilege, and I think that's great that we can highlight that. You also mentioned different
Mm.
domains. How do you think these domains are prioritized in terms of investment as well? Like there are some domains that are hot, some domains that are essential, important, and some people say they're putting money in, but is there really enough money in? Do you think that right now the current environment is going to push people to put the investment mainly on for example climate or tech for good, or are we still going to just put the money where the money is? Like, do you feel that the investment thesis are changing and maybe adapting to a new reality and a new need, or actually there isn't that much changes and it's really domain per domain, the changes happen within the domain but not within the global?
I mean, I think a lot of these things are semi-generational. It can't happen overnight, none of these changes, but they are happening by nature of a number of different stimuli, which is, what do consumers want first and foremost is something that's going to be changing out. And when I say consumers, I mean business consumers as well as the average individual consumer. What are they looking for? What do they need? What have they got an overabundance of and an underabundance of in relation to their lifestyles and what they're trying to build? Climate is an important thing. I think it's silly for funds to ignore climate now, not only because it's important for us to continue running funds and or businesses for the next 200 years, because God knows if we don't do something about it, then we won't be able to. But it's also important to focus on things like impact as a general whole, inclusive of climate, because it actually demonstrates a better economic return than the average business, as far as I'm aware of right now. Again, I'm not an economist, but anecdotally, these are the statistics I'm seeing, that by investing in impact, you're getting a greater return because people are buying for impact purposes. Patagonia, I don't know what happened to Patagonia's bottom line after they announced that
Yes.
incredible action that they took recently of basically, the founder giving away the shares in the company. I imagine that their sales went through the roof. I've never owned an item of Patagonia clothing for no other reason than I just couldn't really justify the price of it previously. But I want to buy one now. And that tells you something
Interesting.
about the average consumer, right? Like, I
Yeah.
want to buy it because it's probably better for the environment. It's clearly a very well run company. They've been around forever. They're probably around for even longer. Can I buy shares? Like, what's happening? How do we get
Yeah.
into this company and do stuff with it? So impact is definitely something that I think investors will be missing out on if they don't jump on that train, really.
But have
Um,
we done a step forward or a step backward over the past year? Because at some point, about I don't know, 2 years ago, it felt like investing in impact
yeah,
industries was the big thing, and lots of funds were popping out, and it was everywhere. Everyone was talking about it. Now, have people been doing it really, given the economic uncertainties, or was it
mm,
more like a marketing stunt and people are getting back to their old thesis because too many
yeah, I think it's
uncertainties to
everything.
to get into that?
I
I'm
think
not
it's the
sure.
same as everything. I think there's a Dunning-Kruger effect with everything like that, right? Like crypto is an obvious metaphor for that. Everybody gets in via or like the innovations that are capable with blockchain technology and crypto technology are incredible.
Yes.
Humans, as a reality, end up selling pictures of like cartoons, cartoon monkeys for millions of pounds. That's not what the technology could be capable of or was even intended for. But we start there and then we create a massive bull market as a result. And we're like, wow, this is amazing. Then we realize, what the hell are we doing buying pictures of cartoon monkeys? They arguably, and I'll probably get shot down for this, don't have any value, do have some value, whatever. There's a big philosophical conversation to have there about art, and then the market drops. After that, we start to see people go back to the drawing board and go, okay, well, what did we learn? What can we really build here? What's really worth funding? And then going back up. That's what I'm imagining is happening with climate, just as has happened with everything probably forever, which is climate sounds great. It's great to have on our website. Let's say we're going to fund that. Oh, we didn't actually really understand what we were really funding. We gave loads of people money to, I don't know, do green tokenization or something. And then you realize actually the net carbon impact of that was heavy, not less than they were actually wanting to produce. So like, okay, well, we go back to the drawing board. What does funding climate actually look like, and how do we do that properly and generate a return? Oh wow, okay, let's go and do that. So I think just like everything, roughly everything, we're going to see, an early adopting market who will try and ride a wave of sorts. Then we're going to see some market correction because reality strikes basically, and or consumers revolt, and both probably. And then over time we see things of quality come out the other side. And then, as I say, going back to the conversation about waves, those are waves that just end up following each other over time, right? So that's how I don't know. That's how I feel it's probably happening. What do you think, though? Do you think that there are patterns there, or do you think it's fairly kind of?
Oh, there's definitely a pattern. I like how you take, for example, the crypto and blockchain ecosystem, because I have been involved in blockchain since 2016, something like that. So I've already have seen some up and down, and the hype, then a new wave of people coming in, building some things and coming back to the roots, and then again some new things and new hype around NFTs. And once again, that people get lots of money, lose lots of money, and then another wave of people come in. So I definitely feel this the same kind of wave like pattern for sure. But it's also exhausting for people in the space. And that's something, that's why I've been involved in crypto in and out. But staying in a space that it is going through so many cycles is also exhausting, because as soon as you have a new wave of people, you have to kind of start again with the foundations, and you do have the experience of seeing that again and again, but a lot of people don't. So it's but that's a model I'm also seeing. We also have an interesting question on the chat, actually from Yinch. Which is slightly different, but I think can come back to that. Yinch asks, will the changes in Amazon, Meta, Twitter affect the funding ecosystem for SME startups in 2023, both in terms of market space, but also in terms of release engineering talent in the job market?
That's a good question.
It is.
And it's topical because I've seen other people talk about this, right? The question probably alludes to, whether it means to or not, the PayPal mafia of old, right? So for those who don't know, there was this exit that PayPal had, including Elon as one of them, and it created this wave of people, overwhelmingly male, who ended up going on to build incredible companies individually, and therefore being known as a PayPal mafia, because they all created massive wealth out of that exit and then created bigger companies as a result because of all the opportunities that brought. There is an argument to say that massive swaths of incredible development talent, you would hope incredible development talent, coming out of the firings at Twitter and the redundancies at Google and Facebook and Meta, and Amazon and such, will be releasing incredible talent into the ecosystem. Now, whether they go on to start their own thing or team up with others or whatever, it's going to be really exciting to watch over the next 1 to 5 to 10 years to see what comes out of that, especially given all the other stimulus that we have right now about the climate, obviously being something that's quite worrying, and political, socioeconomic stimulus that we have to make sure that people are okay and able to keep their lights on. What's going to happen from an economic empowerment point of view? Are we going to see new fintech products? Is crypto going to come into its own and actually create some utility now for people to be able to access an ecosystem where they otherwise were, barriered out of because of the money in their bank accounts. There's lots of opportunities there. I think the talent starts to create opportunities, or create the products that can build those opportunities. And the fact that these companies are starting to come to the end of certain cycles creates new opportunities for other companies to come in. Facebook's a great example. Everyone I know is slowly petering out and not using it. I don't have it really. I've only just got it back on my phone because I needed it to sign in to another app. That's the only real reason I use it now, because I've got single sign-on kind of attached to it somehow previously. Yes, I have Instagram and WhatsApp on my phone, so I'm still in the Meta ecosystem, but they're falling foul and getting at least challenges of disruption by other companies. Be Real coming into the space. Instagram will have either already or be replicating that as a feature, and that company probably won't work very well. Clubhouse came into the ecosystem and Twitter swallowed it up and created Spaces, and then they failed. So they're starting to see challenges arise, and I think that combination of them being a little bit stale and in Twitter's case being very rocky are going to create opportunities for companies like Mastodon, who I don't know too much about, to come into the space and say, hey, we're here actually as alternatives. And if they can sweep up some of the engineering talent Twitter's just let go, who knows, we might have a two-player ecosystem in this at that point. But what do you think? Do you think there's, are you seeing that happen? Are you seeing some of that talent? Have you got exposure to those people? Because I don't really.
Yeah, well, my LinkedIn is filled with people announcing that they have been laid off, and including me. I've made the announcement about 2 weeks ago, and my LinkedIn is filled with people who lost their job. But in the same time, it's not necessarily people from Amazon, Meta, or Twitter. I don't think I have got much exposure to them. But the question you have to ask also is, do these companies really need that many people? When you're a founder, and you're trying to always adopt a lean approach, you're always trying to be frugal. So you think about the people you need, the talent, the skills. When you look at a platform like Twitter, do they really need that many people? For sure, they're working on some stuff that are not released and some, potential new feature and these kind of things. But technically, do they really need that many people? No. Can this create new opportunities for talents? Yes. But in the same time, when you need a job, if you're part of the top, I don't know, top 20, top 50 people of your company, that's great. I mean, you'll either find a job easily, or you have already some ideas and you can start something, or you're going to meet with other people and start a business potentially. Like, you have lots of opportunities. What is very difficult, I think, is for people who don't have this luxury and maybe haven't been building a personal brand. They maybe haven't had the opportunity to build a network over the years working for these big companies, and they end up in the market, and it's tough. It's tough because they own that many jobs. Everyone is cutting their jobs, and it's very competitive. Like, I can see it. I've been looking at some job boards, and you see that in a matter of hours they have hundreds of applications, and it's just crazy. So I'm actually wondering, is it really worth even job hunting, if it's actually a good use of your time sometimes? Because that's the end of the year, there isn't that much job out there, so you're like, yeah, is it worth your time? So I think it's difficult. I don't think it's necessarily bad for these companies to decrease the size of their team, but I think it shows also that growing too fast, growing too big, it's not going to be the trend for 2023. I think everyone needs to adopt a more lean approach, including these big corporations. And when you're a traditional, established corporation, it makes sense. It makes sense to have this amount of people because you have many verticals, many products. I mean, it makes sense. But when you're Facebook or Twitter, it doesn't. So I think that's a problem that we have in the tech ecosystem that is quite focused into the tech space. Too many people to do, like, just because it's making lots of money, but you don't really have to have that big size. So
I totally agree. I think efficiency is important, right? Like profitability. Google has such high profits that they almost have to hire that many people to make it look more reasonable, that they're not getting, investigated even more. That's, what is it, like 90%, 99% of their profits come from one product, and everything else is just an experiment waiting to die, basically. And, that's wild to me that they got to something like, what was it, 86,000 or more people. And I think what it will adjust in 2023 going forwards is company culture, and what does success for middle managers actually look like. And I say this loosely because I don't have any. There's two contractors that work for me at the moment, and I've only ever had small teams previously, but I've seen it through clients and companies that I've invested in, how this ends up kind of playing out. But middle managers have to look for something that can validate their position in the company. And if promotions aren't possible and pay increases aren't possible, then actually building teams underneath you, if you have the autonomy to do that, might be a good way to validate your position by building your own little space within the company. And maybe, I'm not saying it's exactly what it is because I don't have proof of this, but maybe that's one of the things that led to what happened at these big companies is, you live at work now because you're living on campuses that are designed by your workspace. So you're building your own social circles and your own teams. And what's better than hiring people that will be your friends as well as incredibly talented people to delegate to? Then all of a sudden you realize you've got an overabundance of 50% of your team that are underutilized, then all of a sudden they get fired. Then you've made a kind of a rod for your own back at that point. And I think we just need to recognize those people rather than saying go and hire more people under you. What else can we do to recognize them for the great work that we're doing? WhatsApp was 50 people, I think, when it was acquired. And they had like millions of users at that point. It's unreasonable for people to say that Twitter could run on just a few people. I imagine the amount of emails Twitter gets every single day is enough for a team of 5 to 10 people to have to manage. A couple of hundred slash whatever it is, 3,000 that they were at versus the 3,000 they were at, there's a number in between there that's more reasonable. But it doesn't make me laugh because it's morbid to see people lose their jobs. And I never want to see anybody lose their job at all. But it is interesting to see the dynamic of the ecosystem kind of play out after things like TikTok, here's my day at Twitter, videos go viral, right? Like, here's my day at Twitter, start off the day with yoga, and then I go and get some breakfast, and then maybe I'll do a bit of coding, and then I'll hang out for company drinks. And it's like, how much work happened in this day? I know social media is a lens, and I know that's not going to be their average day, but it's, there's kind of a self-fulfilling prophecy in there that says, if anyone at your company is doing here's my day at this company, and 4% of that TikTok is their actual work, how many people have you got versus how many people do you need? But let's be more lean, more mean. Let's hire incredible people, especially the people that have been let go from these companies, bring them into the company, and then make the maximum most of them because that's what they want to.
But you know what? I think it starts with knowing exactly where you're going and what you want. Because something that I've seen also in some companies that when they have enough funding is sometimes hiring good people without knowing what they're going to do. And you're like, well, it's a waste of time because how do you want to attract the best people if you don't really give them a glimpse at what they're going to be doing, what kind of part of the company they'll be owning, like what will be their role. But also, if you yourself, as a founder or as a hiring team or whatever, like as a company, if you don't know what these people are going to be doing, do you really need them? I mean, doesn't make sense, right? And I've seen a number of companies, surprisingly, having this approach, which is a bit odd. So, what are your prediction for 2023 or tips for founders who are right now thinking about what they can do to prepare for 2023? I'm thinking, for example, at companies that are right now struggling to fundraise, and we know that if you haven't closed your round by the end of this week, that's going to be tricky. If you're still having these first meetings, that's going to certainly be over until the new year. So what can you do, or even if you're not fundraising, what can you do as a founder to be ready for 2023?
I think that's the golden question, right? If I had all those questions, then I'd be on a yacht right now. The answers to those questions, I'd be on a yacht right now. But the my assumptions and my predictions here would be, my advice would be, like, go back to basics. One, remove the emotional connection where possible with your company. It's important that you're passionate about it. It's important that you care deeply about the subject, because that's what's going to get you up in the morning, and keep you going when the times are tough. But you are not your company, and your company is not you. And I say that from a place of having had that conversation, that existential crisis myself, to be able to go, okay, well, what am I and who am I outside of the company? Hustle porn's been a thing for a long time. We moved away from that to get to the point where it's now, just do a normal job and do it healthily. Now I'm seeing it kind of go back the other way of going, actually, no, big companies happen when you put in incredible amounts of hours of work. I think there's a balance in there. Work while you're passionate and take time off if you start getting burnt out. Logic, right? So thinking about that in the early days is going, okay, well, remove your emotional connection to the company, then it allows you to be way more objective. And once you're more objective, you can make more objective decisions. Like, would this company survive the next 12 months if we have 50% of the staff? And if you're transparent about those conversations with your staff about, look, the company needs to survive by default, we cannot afford to keep you. Yeah. So therefore, we have to make that decision. Firing is never a comfortable thing. Making people redundant is never a fun thing. Yeah. But if the company needs to survive and you need the company to survive, then that might be something you have to do. And it's easier when you're objective about it, when everybody else understands the objectivity of the company needing to survive. Doesn't mean you should leave people high and dry. Soft landings are important. And as you said, job applications in this ecosystem and the economy are crazy. Yeah. Helping people out with networks is something that founders are able to do. Inherently, this will help build social currency so that when you are able to hire again, you've got a much better reputation of people that even if you've let them go and find them a soft landing, they may reapply or they may recommend friends to join your company because they remembered how wholesome the joining, work, and even leaving experience was. And then going back to basics, sell something. Like, I say this on every podcast or conversation. I probably said it on the last one that we did, actually. But just sell something. Even if it's just enough to pay the bottom line right now, even if it's, just not enough for that, it starts to prove a model. And I've seen companies, there's one in particular that comes to mind that I used to talk to back and forth through the journey of building Jena into Dffrnt, into where it is today, when we were just free meetups. And their point of view was always raise some money and figure it out eventually. Could have been right or wrong. My opinion was, I'm going to monetize this at some point somehow. I don't know how yet. And then if and when it works, I'll raise some money. Could have been right or wrong. Over 3-4 years, they grew, had hundreds of thousands of users, couldn't figure out how to monetize. We didn't really grow. We had enough money to pay the bills. Depends on your version of what success looks like. But they've now since closed their company and we're still here. It's only me and 2 contractors. So am I even successful? Arguably yes, arguably no.
Well, you're still around.
The company's not dead.
Yeah.
Exactly. And so we live to fight another day. The other one doesn't. And there's nothing against them. They just took a different journey and it could have worked out completely differently. Their company was amazing. I love the concept and I'm sure it'll come back in some way, shape or form at some point. But all of that goes to say, as advice to founders, do what needs to be done. Be transparent and objective and honest about it. Don't be afraid to make those decisions because they have to be done. Don't turn them into marketing campaigns. We saw the backfiring of, the quote unquote crying CEO. Whether it was genuine or not, be considerate, be a human about it. Not everything is a tweet. And so make sure that's factored in.
In the same time, it's tough because everyone is pushing you to share more, to create content constantly, and finding the limits. When you're planning ahead your content, you're here with the blank page, and you're like, where's the limit? You don't really see that until you see it in the middle of the platform after you push the publish button, and you're like,
so how do you do it then?
Maybe
like
not.
You're a content creator. Like, where is the line drawn? Is there a set of 2 or 3 golden rules that will make you go, workflow diagram, do I post, don't I post? I
think it depends who it concerns, right? So if it just concerns me, oversharing about my feeling, just going to make me feel crap for a few minutes, and then I can always take the post down. If it concerns other people, that's another thing, and I'm more cautious about that. For example, I posted something a few weeks ago, and someone didn't like the first line because it was showing off first and was like, don't really like that. And like, I really thought a lot about that because I wanted to be cautious. I didn't want to have any negative thoughts and negative vibes around that. So I've done my best. I think it's okay. So I felt comfortable posting it. I understand how someone could have thought, oh, that's a bit negative for this or that. But, I try to put myself in other people's shoes, and I try not to post anything that could be considered as sensitive or insensitive if it's involved someone else. So yeah, that's something, that's the way I go. But it's difficult. And talking about founders in different situations right now, I think everything you said is very important. You need to really do whatever it takes to maximize your runway and keep your company going. But in the same time, I think a way to approach that is also to take control of your runway and your business, how it's being run. So there's some founders who actually, for example, technical founders or founders who are, I don't know, more marketers or whatever your profile, who are a bit afraid of the financial aspect of the company. And I think if there is a moment where you need to be on the top of things, is actually during this kind of difficult time. You don't want to be in a situation where actually you didn't realize that this and that will affect your runway, and then you have to kind of in a panic mode fire some people, or you don't want to be in this kind of crappy situation. So the best thing is to be on the top of things, get your hands dirty, take the time. Right now we're getting slowly into Christmas, and Christmas is going to be a downtime for lots of people unless your business is related to selling stuff around Christmas. But otherwise it's going to be a bit slower. People are not going to be reactive on emails, and the business is going to slow down a bit. So take this time to get your hands dirty and see what you can do to actually support your business, in terms of your cost. Maybe it's so easy to have like recurring costs that are just adding up and piling up. Maybe you don't need to use this fancy tool. Maybe a very good, well-organized spreadsheet is best. This kind of small cost. If it means that you can cut some of this cost and keep someone for a few more months, or not have to fire this freelancer that works with you or whatever. Try to look into that, and as you said, focus on revenue. If you can just, I don't know, monetize a new product, optimize in some way your revenue, accelerate it. Maybe your MVP doesn't need this extra feature that costs 3 months of work. Maybe you can go to market earlier. Maybe you can have pre-sales and have your customer paying for this extra months of work. There's a bunch of things that you can do to try to get revenue earlier on. Sometimes pivoting. That's what I did with my startup. We couldn't raise money with the initial idea. We pivoted the business when we saw an opportunity to monetize immediately. Didn't work out in the end, but I feel that because we've tried that, I feel relaxed when we decided to leave the company and stop it, because we did everything we could, and so there is no remorse or no thinking like, oh, maybe we should have tried that. We've tried everything, didn't work out. Fine, next chapter, and maybe that could be also your situation. So
I mean, if we have a moment or two, it's just worth sharing a little story here where I kind of practiced something that I preached to a lot of people for a while, which is that like your own financial mental health is the first and foremost thing that you need to look after. And that goes beyond the business, right? People, when they've started their business, they think, hey, this is all me and everything now, because everything they read tells them to focus and be all in and no plan Bs and all the Instagram posts that we're going to get, targeted with all day, every day, because we're in that algorithm now. But, one of the most healthy things you can potentially do if you're struggling with your business is to go and get a part-time job, some sort of contracting work, some sort of consulting work, some sort of advisory work, something like that. And the story that, brings that all back down to earth is that that's literally what I've done. So Dffrnt had a big tax bill in August, I think it was, maybe July, that I should have saw coming, and I did kind of, but revenue was tough post-COVID because
Yeah.
all of our events had died, so all of our sponsorship revenue had dropped. And so I'm like, okay, well now I've got tax bills that are coming up. I'm going to have to pay with revenue that doesn't now exist. And it was tough, and I was really nervous for like 30 days, thinking, what am I going to do? Because basically the bills that I'm going to have are probably going to be bigger than what we've got in the bank account. What do I do?
Mm-hmm.
And as a reality, that contracting work right now serves two purposes. It serves the very first purpose, which is I need to just go and generate some more revenue somewhere in the other company that was dormant, I've had for like 13 years. It just sits there in case I get any speaker gigs or whatever that I want to put through there. Go and earn some work through that. I'm very aware, not to take it for granted, the privilege I have of building a network over 10 years. I can then turn to a network and try and get some work from it, which I did within about 40 days. I managed to create a couple of retainer clients that now pay just enough to cover my bills. But it means that all the revenue in Dffrnt, the old company, in Dffrnt, the company that I've run for a few years now, that I was worried about previously, instantly, like as soon as I hit that magic number of my bills being covered, I was so less worried about one, the tax bill, and two, the bills at the end of the month. So much so that now, obviously, I've used that revenue to hire two people to help me grow the company and pivot it slightly and change it, and the bills are paid. And all of that came from just taking the objective view of going, we're in a bit of a tight spot here. I can either, be way too proud and change nothing, or I can just do what's necessary and make these moves, and did. And now I'm in such a better position that makes me feel more relaxed. And as a result, I can be way more creative with the company, way more objective with the company, do way cooler things because I'm not in the forest. I can see the wood for the trees. And, that's, I guess, the key advice for anyone who's going through it right now into 2023 is don't be too proud. Do what you have to do.
Yeah.
If you have to go and pour pints at a pub, clean some windows or cars, or consult for some corporate firms or whatever you need to do it. Because if your company survives and you truly believe that a company needs to survive because it does have a future, then that's what you need to do and get it done. But otherwise, somebody tweeted the other day, and I kind of agree too, if you are going to close the company, there's a load of big news and media happening right now. Might be the best time to do it if you want a soft landing for the closure of the company. Some people use the closure of the company as a PR stunt anyway, right? Like, if it's going to die, might as well die loud, and I can make that a big story. Fair. But actually, if you want it to die quietly, you can get away with it so easily right now because no one will really ask any questions. So, there's win-wins all round in negative situations as well. I know I'm an optimist. I know there's a certain level of privilege, but I'll always see the silver lining because it's my default. Yeah, but I can say it from that point of view because I've been in it for the last 3 months. So I'm there with you if anybody's watching this and they're struggling right now.
And if you have to shut down your company, I'm with you because I've been there last year, and the past year has been about closing this door really. And I'm grateful that I had a job.
Feel? Yeah.
Yeah. So basically, a founder that I knew, someone I knew, started this company, and he reached out to me right at the moment where my co-founder and I decided to stop the company. So I didn't even have to be job hunting last year. I immediately had a job, and I am very lucky because I was very stressed about having to be job hunting. And now that I have to be in this position again, it's like, oh crap, I've just postponed the problem instead of doubted my skills and thinking who would hire a former founder. And once you have this founder mindset, it's a bit harder to fit in the mold, like to fit into a job description. It's a bit harder, and so yeah, it's not easy, but if anyone wants to chat, I'm here. And it takes time also. It's not going to happen over time.
And they need someone like you.
Yeah.
You need to be top of the list. I'm sure there will be lots of people that will bite your hand off for a role right now. And I would shout out actually for anybody else in a similar situation, there are companies like Chief of Staff Network.
Yes.
Like there's a jobs board there, right? Like Chiefs of Staff are great titles because they're founder jobs without the fear at the end of the day, because it's often salaried, and so you get to do all the fun things with less of the risk, which is arguably less of the risk, which is an interesting role. And just lean into your strengths. I got told plenty of times that if I ever had to quit, what I would do, I would be earning a decent salary. And I was like, well, that sounds great, but like that's all theoretical. Those are numbers I've never seen in my life. So like, I don't know how real that is. And then I actually tested it. I interviewed as a VC associate. Interviewed is a strong word. I had a conversation about a VC associate role. And 20 minutes into the conversation, and I say this humbly because I didn't expect this, 20 minutes into the conversation, the guy interviewing me turned around and went, I think it's very clear that you're overqualified for this role. And so I was like, okay, well, that's one, great confidence for me to know if I ever wanted to be an investor, I could potentially, great. Two, you know, the number attached to that role is lower than I would be able to potentially get. So that's great. And it was just a nice little test. I don't, you know, advocate anyone wasting anyone's time. I didn't do it just for the experiment of it. We did it for the other stuff that came with that conversation. But
I've tried.
But
I know exactly what you're talking about. I had this conversation with VCs. Yeah.
You're gonna go and start a fund now, Amandine?
Who knows? You know what? That's a problem because I have this entrepreneurial mindset. I have so many things I'd like to do, and I'm like, crap. Instead of job hunting, maybe I'll build something. And I'm like, no, that's not the plan. The plan is to find a job and work for at least another year or two before getting into another startup. And I'm like, yeah, but you know, these ideas here.
Hey,
we'll
but
see.
side hustles are way more fun when you've got a salary coming in, right? Just spend it.
Yeah.
It can be an experiment as well, right? You can do like what could I build if I only gave myself an hour a day every day of the working weeks? 5 hours is 20 hours a month. You know, you're a content legend, so you can go and build content around that. And there's a whole YouTube series of how I built a £100 a month, £1 million a month business using 1 hour every day for a week, for a year. Like, there's so much stuff that can be done. You know that. You don't need me to teach you to suck eggs, but I guess for everybody else listening, thinking, oh my God, I have to throw all my eggs into one basket. It's really stressful. And how do I take the leap? You don't have to.
Yeah,
there aren't any rules, really. Do whatever you feel feels right. Because if you feel it feels right, there's probably actual, like, real data that's telling you whether you realize it or not. So, yeah, I'm looking forward to what 2023 brings.
Me too. Well, Ash, I really love talking to you, and I feel we can talk for hours. We're already over time. Let's wrap it up now. But thank you so much for joining me today. It has been super interesting. I hope everyone has found that also useful for them. And thank you to everyone watching us today from YouTube and LinkedIn. If you have missed part of the stream or anything, or want to rewatch it, that's going to be available on Monday on my YouTube channel, and YouTube is where you can find all my interviews. So 3 years of monthly interviews with founders, even more than that, because initially when I started it was twice a month. So you have lots of interviews with early stage founders, so check it out. That could be quite interesting. And also, I use this opportunity to announce that I'll be restarting the monthly interviews in January. I've had a break between the summer and now, and I miss it. I really miss it. I just added too many formats and I burned out. But now I'm just going to restart just the interviews, not the rest of the stream that I did. And if you enjoyed today's discussion, which is slightly different from the AMAs, well, let me know, because we can do that maybe quarterly, have different guests maybe, or Ash again, depending on your availability.
Nobody wants to see me 4 times a year. That's crazy.
But every quarter or something, like a checkup on the startup ecosystem. What's the things to take in consideration at that specific time. Anyway, feel free to connect with me on LinkedIn or Twitter or any platform. Give a follow to Ash as well. Ash, what's your best platforms?
For me,
Twitter?
Probably Twitter, which is at @AshPhizzle, because I'm cool like that. It's my gamer tag, so it carries over. If anybody wants to 1v1 me on Call of Duty, they can probably find me there too. But yeah, @AshPhizzle on Twitter, 2 Z's at the end. And I'm also trying to build the YouTube too. So, I'm just trying to be like you, really, which is Ash Builds. You probably, unless you've tagged me in it, Ash does things, sorry. But yeah, if you can't find it, then I'm sure there's a way that I'll drop a comment in this video and you can see it.
Yeah, that sounds good. And if you don't, I'll do something, because the video is not going to be live immediately. It's going to be live on Monday. So I may just put the link there or something.
Yeah.
Anyway, we'll figure out the details. Thanks everyone, and have a fantastic weekend ahead. It's almost the weekend already. Bye for now,
Have fun.
everyone.